The rapid escalation of SVB's issues after the bank announced on Wednesday that it would raise money underscores how aggressive policy tightening by the Fed and other central banks to battle inflation is revealing weaknesses in the market. U.S. Treasury Secretary Janet Yellen has called SVB collapse a matter of concern. The White House, however, says that the banking system remains resilient and regulators have effective tools to address this type of incident.
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
Our Secretary of the Treasury, Secretary Yellen, is closely tracking the developments with the Silicon Valley Bank. What I will emphasize as well is that our banking system is in a fundamentally different place than it was, a decade ago, and that the reforms that were put into place back then really provide the kind of resilience that we'd like to see. So we have every faith in our regulators.
Nearly half of U.S. technology and healthcare companies that received funding last year were SVB's customers. The bank also had connections with leading tech companies like Shopify and ZipRecruiter. Also, U.S. banks have lost over $100 billion in stock market value over the past 2 days, with some European banks losing around another $50 billion in value. So, SVB's fallout has raised fear that more banks might face the same fate against the backdrop of high inflation and ever-rising interest rates. WION is now available in your country. Download the app now and get all the news on the move.